Welcome to, I think it's day 3. This is a very exhausted Trader Travis. My video for the day is late, but I am committed to, again, staying on task here. The difference, and I'm going to wax on here real quick, that's the difference between a decision and a commitment. A decision is a choice you make, but it's not set in stone. You can kind of waver back and forth. A commitment is a decision you make, but you're committed to following through no matter what, no matter how you feel. So with that being said, what I want to do is today I want to talk about first recap. So if you're a Success Academy member, you can drop off this video. I'm just going to recap what we just talked about in our live call. And for those who aren't, part of the Success Academy, I mean, we had, one of my most favorite calls tonight. As a matter of fact, I got a message right after our live call, and one guy was like, he said, what we discussed tonight was worth at least $5,000. And he was like, I feel sorry for the people who leave the Success Academy or the people who don't get the value they just received. And I was like, yeah, of course I'm biased, I agree. But what we talked about is I showed them part of what I call my bear market blueprint, the strategies I use when the market crashes and why I don't freak out, because I showed them how you can, I'm not saying this is guaranteed, but I showed them a method of buying over 100 grand of stocks risk-free, not using any of your own money. How to get the stock market to give you 100 grand so you can then buy stocks. With those stocks, you can hold them, for passive income via dividends, or you could trade cover calls on them and make, cover calls is what I call renting out stock shares. You can make, bring in instant guaranteed cash. It's just the way the strategy works of like 1 to 2 grand a month, depending on how you employ the strategy, right? But again, it's, in my opinion, they're not technically risk-free, but it's not using any of your capital. You just use certain strategies where you get the market to pay you money. As a matter of fact, let me pause this and I'll show you one of the methods I use. All right, so what you're looking at on the screen is page 18 of the 2008 shareholder letter of Berkshire Hathaway, the company that Warren Buffett runs. And so Warren Buffett, a lot of people don't know is that he uses options. People always quote him as hating options and they're derivatives or weapons of mass destruction. I'm like, wow, have these people read his annual reports or, read his 13F filings where he actually details how much money he made? And in this letter, he received $4.9 billion. Okay, he's a billionaire, but yet he's received billions of dollars by using options, and he sells put options, right? So I modeled this, studied this, found a way for us small-time investors can use this. So it's something like that. I showed them on the call, hey, how we can use a strategy like this to get money from the market, then take that profit, and then accumulate stock shares, and then dividends, cover calls, things like that. And so it was based on the bear market, though, how we set ourselves up. We use a market crash to set ourselves up to profit, which is why I don't worry about declines or market crashes, because I have a plan to profit. Second point I want to point out is something I stated in yesterday's video was inaccurate. I talked about how much money I lost, and thanks for all the people who posted, hey, I lost money too. So I want to get some definitions first, because maybe I misled you, because that's actually not accurate what I said, or not true, and I didn't mean to mislead you. I just thought about it afterwards today. So first, someone might say, well, Travis loses money. Why should I learn from you, right? And let's go back to Buffett, right? Does Buffett, the world's richest investor, does he lose money? Yeah. So why am I judged when I lose money? And I know why. It's because you're judging me, not you, but people judge me by an unfair standard created by salesmen disguised as traders. All these marketing gurus who are just probably now still telling you, sending you emails about these secret strategies and how much money they're making, but they're kind of glossing over the money they're losing in this correction, because guess what? There I go again. I talked about losing money. It's not technically losing money, and that's what I want to talk about. But they're glossing over, well, some of them might have lost money. I didn't lose money. I said I lost 14 grand, but I actually didn't. So anyway, they gloss over the actual declines in their account. They pretend like they don't exist. So when you, as a student of theirs, lose money or have these kind of moments, you don't know what to do because they've taught you some, fairy tale strategy that does not work in real life. Now let's come back to losing money. I said I lost 14 grand, but that's not true. I didn't lose any money. My account declined $14,000. So if you didn't technically lose money or book a loss, then both of us, me and you, and sorry if I led you, but to saying lose money, it's actually not a loss. It's only a loss if we close out our trades right now and I book this 14 grand loss, right? Or 14 grand decline. This is a decline. It turns into a loss when I close out my trades. That's more accurate. So my account declined 14 grand, but it will never be a 14 grand loss because I have insurance, right? So when my account declines like this, I make a big deal and it's be all dramatic about it, but I'm like, I have insurance. And when I'm tired of seeing this loss in my account, I file an insurance claim and I get all of my money back. That's the principles I teach in the Success Academy. There's a video in the Success Academy where I show them exactly how to do that. I'm one of the only people I know who teach that method of insuring your portfolio. But it's only because I'm an idiot who went bankrupt in real estate, and I was like, never again do I want to lose that much money. And so I took that heartache and principles of being low risk, and now I apply it to the stock market. So yes, my account has declined the last few days like most other people, but I have not lost money. And I will not lose more than 10% of my account at any given time because that's part of the risk parameters I set for myself. I will lose money one day, but when I do it, it'll be like 10%, not like 30, 40, 50% of my account like other people. So when the market corrects like this, like it is now, I'm not worried about it. It's not a big deal. I know where my bleeding and my account losses or declines will stop. All right, now, next I want to point out a tweet that I saw on Twitter real quick. And nothing against this guy. He seems like a decent guy. Let me find here right quick. I want a 5-year monthly chart. But I can only imagine why he posted a tweet like this because I know his kind of trading style. He trades what they call high probability option trading. And it's where you place trades that have an 80 to 90% probability of winning. Right? I'm laughing because I'm thinking back of my real estate days like, what's the probability of all 8, 9 of my properties going empty the same month, right? But anyway, you have these high probability trades. The only problem is there is no free lunch in the market. So yes, you have an 80, 90% probability of winning, but when you lose a ton of money. And I'm talking about like, hey, I can make $20 but have a potential losing 400. Those kind of risk rewards. And guess what? When the market drops very heavy like it's done recently, people are freaking out because they've lost so much money in their account. And I know he trades naked strategies. Naked strategies are strategies that have unlimited loss potential. That is insane. I will never invest in any strategy that has an unlimited loss potential. So when the market has these declines, people freak out. And then he's saying a move like this is a 4 Sigma move, which I could never teach my kids. So a 4 Sigma move, I'm like, I simplify everything, right? So he's saying a move like that's happened recently only occurs once every 127 years. I'm a former active trading bigot, and I've seen stuff like this all the time. We use stuff like this to make us feel good about the money we recently lost. Oh, this only happens once in 127 years. It can't happen again. Are you watching the same market I am? Because all these little yellow highlights I have here, these are market corrections. A market correction happens once every year, not once every 127 years. Now, I know what he means, the magnitude and how the correction unfolded. Yes, may only occur once every 127 years. But people, market corrections happen on average once every year. The market corrects on average 10% every single year. Look at all these highlights the last 5 years. This is a 5-year monthly chart of the S&P 500. This is how many times the S&P has had 2 or 3 losing months in a row. So it doesn't happen every 127 years. It happens on average every year, and you need to plan for it. So that's my message for the day. Don't rely on probabilities or statistics and what is not likely to happen every so many years. No, prepare for the worst and anticipate the best. Set yourself up to win no matter what the market does, but if, okay? No, not if, but when. Not if, but when the market declines, you won't blow out your account. You won't lose 50% of your money. You won't have sleepless nights. We always, 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 always prepare for the worst, and then we anticipate the best. That, my friends, is the key to winning as an investor. If you plan for worst case scenario, when it happens, It's not a big deal. You already have things in place. It's just like life, right? I plan for worst case scenario, my demise, right? Nobody likes to talk about some people like talking about dying, right? But nobody likes to really think. Most people don't like to think about it. But I'm like, okay, everybody, like my wife said the other day, everybody will die, right? I know that will happen. So why don't I just get life insurance so that my family's not stuck, like we were when my dad died as a kid. We didn't have any money and we struggled, right? Because we didn't plan for worst case scenario. It's no different with investing. Just plan for worst case scenario. So when it happens, you're not suffering, right? So it's just simple, prudent way of living life. All right. You take care. See you in tomorrow's video. Bye-bye.